Morning, good morning. Thanks for joining this breakout room.
Morning.
Good morning. Hi, Michelle.
Good morning, Veronica. Okay, so we're just waiting for Edmund now. Our speaker is not in the breakout room yet. All right. Is everybody excited? I'm excited to hear from him, always.
Yeah.
Okay, there's Edmund. Okay, so just a quick housekeeping. Make sure your chat is on mute, silence your phone. This is recorded right now. And Edmund said that he will be taking questions as we go along. So yeah, just type up your questions, or you can also raise your hand. It's going to be pretty interactive. Is that correct, Edmund?
Yeah. So if people want to either, if you want to speak up and tell me a little bit about tell me a little bit about what your challenges are when it comes to capital raising, or like where you're at in your journey, what the biggest challenges that you have. I do have some stuff I could talk about, but it just, if people tell me kind of where they're at in their journey and what you would like to know in the next like 45 minutes, I'll be happy to focus in on things that are very specific and specific challenges that people have.
Okay, awesome. Okay, so I'm not gonna take any more time with you. Opening the floor right ahead. And if anybody has questions or intro, feel free to do that right now so we can start off.
Yeah, you can either put it in the chat or you can unmute yourself and just ask a question.
Hey, my name is Eric Morales, and I am from Cape Coral, Florida. Basically, I've I've been an asset manager and also, I am an underwriter for over 25 years. I've, throughout my career in real estate. One of the biggest things that challenges, that's why I chose investor relations, has been that I've brought the deal to contract, and always the fundraising has always been challenging for me. Now, in understanding that you cannot do everything yourself, is it recommended to collaborate your efforts with someone who is in investor relations to raise the capital if it all makes sense?
Yeah, so I'll put the pros and cons of how to do that. I just want to make sure that we're defining investor relations correctly. I think kind of what you want to find in the financial services industry is that when we get to private equity or real estate syndications, which this classifies as, when you get to the pro leagues, the investment firm is typically split into two sides of the house. One side of the house is what we call client facing or sell side, and then the other side is considered asset management or buy side, right? So in the industry, those are the terms: buy side, sell side. So in my entire career, I was always sell side, which is client facing. And that is the whole blanket investor relations. But investor relations usually signifies or means uh, working with existing clients. And the other part of the activity in that client facing side is capital raising or finding new clients or onboarding new clients. So Eric, I just want to make sure that I understand your question correctly. Are you talking about handling existing clients or finding new clients and finding new capital?
Well, if I bring a deal to fruition and bring it as close as I can, and I need let's say the necessary funding in place besides the GP, I'm talking about the LP side. How does an investor relations or someone within investor relations can probably, do they normally have a clientele already lined up, or of investors that they can just pitch it to raise that capital for this deal? Because that's basically what I'm referring to more. The
okay,
fundraising.
yeah, sure. Yes, so the entire fundraising side of it, of course, somebody with those existing relationships is going to be a much more valuable connection versus somebody who doesn't have any like accredited investor contacts. But somebody who's already managing money, yes, that's a much stronger connection to have. One of the things I would like to say is it's kind of like it's kind of like like when you go to the NFL, when you're very, very, like when you're playing football in high school, it's okay. You can maybe play both sides, like offense and defense. But once you start going semi-pro, you go to college ball, you got to really start specializing. And you might understand what happens on the other teams, but when you start to specialize, you get very, very good at one specific task. And that's kind of what the sell side and buy side is like. So if you've been an asset manager, I would say, especially been doing it for 25 years, I would say that it's probably not a great idea for you to try to learn how to capital raise, because it'll take you another 10 to 25 years to be proficient at it. So it's far better to work with somebody else. However, I will say this, I'm 100% biased, but it's in my view that the people that own the client relationships, so if I've been fostering and developing relationships with multimillionaires for the last 10, 15 years, I have a lot of the power because I can tell them where to put their money. And if you and I have a falling out, I can take the entire client base and leave. And it's going to be a lot more difficult for you to try to keep them versus me, who's been developing those relationships for 15 years. You might as well try to ask my wife to marry you.
Right. I understand. I understand. That's why do you suggest for an investor relations to be amongst several investor relations people where you're not putting all your eggs in one basket?
Yeah, that's an interesting thought, and it's an interesting idea. I don't think there's any kind of hard and fast rules, but what for you, what I would do is in your business development is to do a SWOT analysis. So take a look at your strengths, weaknesses, and opportunities and threats, and that could be one of your threats, which is if you have a really good capital raiser, he or she's got a lot of great relationships, but you're exposed like 90% of your book of business or 90 to 95% of your book of business is one person, then you got to keep that person very, very happy. So that could be a big risk to your future development. So that might be a good solution is to have 3 or 4 different people that you have relationships. So if you lose one, you're not completely out of luck.
Right.
That's a good idea.
Right. Okay. Yeah. Perfect. Because again, my issue has never been taking the deal to the to almost the end. From beginning to end, evaluating, underwriting. That's not an issue here. It's always been to kind of get these deposits, get a good sponsor to come in and kind of underwrite the loan documentation. As far as the GP side, that is all super clear, and I understand all the carve outs. But more important to me has always been the fundraising aspect of it, which is not one of my great strengths. That's why, as I mentioned before, I chose this, this room. So that's all. But you're pretty clear.
And I can show some people some other thoughts to get like, I'm just kind of curious for other people in the room, where are you in the stage of capital raising in your capital raising journey, just so I can get a better idea. Is there any other questions that people that are front of mind? And feel free to put them in the chat too if you're a little shy. If not, I can launch into some stuff. Okay, well, while we're waiting, go ahead. So Amanda, you had a question?
I'll ask a question. So
Sure.
I love what you said about potentially building relationships with existing capital raisers. I would also say it's equally, if not as important or more important in some cases, to make sure that you maintain that relationship, right? Because obviously you want to be able to do right by your investors. But my question really has to do with more expanding the list of investors. So if you've gotten to the place where you're good at having investor conversations and you're able to raise effectively for a couple of deals, and be able to go back to your client list, what kinds of things would you suggest to do to expand that list?
Yeah, once you have existing clients, that's when we're talking about the process of investor relations. So there's two. If you have some existing clients, you can start to develop a more sophisticated capital raising process. So one of them would be working with your existing investors and being able to deepen those relationships. And if you have a very strong purpose or a very strong why, the more it resonates with the existing client base, the more referable you start to become. So you deepen those relationships, and a lot of times, if that really resonates with your client base, you don't even have to ask for referrals. They would want to see you grow, and they will start to refer other people that are also accredited, right? And then you put that alongside with trying to raise capital from new people. If you're trying to raise capital from new people, take a look at your existing client base and see if there's any kind of pattern. Is there any specific demographic that you see? Because you've already had success with that demographic, chances are you're going to have success with it. So for an example, if you're really good with IT professionals, or if you're really good with doctors, or your client base is mostly millennials, or your client base is mostly baby boomers, then go out into society and try to repeat that. So don't try to reinvent the wheel every time you go and raise capital. Just the larger your investor pool gets, the more you'll start to see patterns and start to follow those patterns with your new capital raising.
That's great. Thank you.
Yeah, you're welcome. Veronica, you had a question?
Yes, thank you, Edmund. That's a good point, the last one that you mentioned. But I was asked to bring investors into the deal, and I'm still struggling to put towards the finish line, which is, they do sometimes do the soft commit, but finishing it off as if that's the struggle for me. Yeah, that's where I'm at right now.
So that's a great thing. So you have a pipeline. We call this like a sales pipeline. So when you have a sales pipeline, some of the major components are funnel filling, which is lead generation and finding clients, accredited clients, pitching them, and then getting to, you're at the stage where Veronica's at the stage of what we call soft commit. And then a lot of, like a professional director of sales like myself, I take a look at everybody's funnel. And I look at the numbers of people you have in your funnel. So record all those stats. And what I'm looking for is, where are the big drop-offs? And is there a significant drop-off? So Veronica, say for an example, I look at your percentages. How many people are you filling your funnel with? How many people did you pitch? How many people did you get a soft commit from? And I look at those percentages. And then say you got to soft commit, and then you had like 80 soft commits and you ended up with 3 checks. There's a big drop-off there. So that should tell you how to troubleshoot your sales process, because if you have a significant drop-off, your closing ratio is very, very low. You're doing something that's not working there. So what that suggests to me is, if you've got a whole bunch of people that are stuck at soft commits and you can't get them over the finish line, it suggests to me that your value is not high enough. So this is kind of for everybody. The way that you increase the velocity of your sales pipeline is to increase the value for what you're asking. So if you're asking for a $100,000 check or a $500,000 check, you have to show them value that is important to that prospect, that is above and beyond what your ask is. So if your value is lower than your ask, it's going to grind. You're not even going to get to soft commit. So you've done whatever to get them to that soft commit, which is you've shown them enough value for that 100,000 that when you pitch them, it's like, you know what, that sounds good, but you haven't really tipped the scales enough. So that way, in the sober dawn of light, they were like, on second thought, maybe I don't want to do that, and it's very difficult to follow up with them, which basically means that you've got to tip the scales again. You've got to so a lot of times when I get to a soft commit, when I ask them to go and give their money, I go back to the points. You should be taking notes of every meeting. What were some of the benefits that really resonated with that prospect? And you have to repeat a lot of those benefits. I remember you talking about this, and this. Has that changed? Like, you wanted to retire early, you wanted to get cash flow, you wanted to sell your business, whatever their pain points were of why they wanted to invest. And then you have to repeat them to remind them. And then you say, well, I can show you how to do that. Now it's time to go and pony up, because that's probably one of the most delicate times, is to pivot people from soft commit over to an actual delivered or wired funds.
That's a good point. Thank you for sharing that. Yeah, that's great.
Yeah, so this is kind of for everybody. We're talking about the close phase. Whenever you're doing a call to action or a close, before you have an ask, remind people of the benefits that you should be paying attention to during your pitch. So if they perked up to something, or they say, well, that's really good, make a mental note of that, and then repeat all those good points just before your ask. So you've got to repeat them, and that's part of the closing phase of a presentation.
Thank
Okay,
you.
so we've got another about 15 minutes or so. Actually, Brian and Edna, you had a question. We have a deal, and we are raising, or you're new to capital raising, so you have a deal. Just quickly tell me, is there a timeline that you have to raise capital, and how much?
Yes. Hi, Edmund. We're with Brian Briscoe, and we just got involved recently, and soft commits are due by July 14th. So we're kind of
24. Not-
well, that's the soft commits are the 14th, but the money's due. The close is the 24th.
We met yesterday.
Okay.
So
Yeah.
yeah,
Yeah.
we're
And do you have any kind of relationships just yet?
yeah, we do. And we're still trying to finish up the work on the Invest Next site so that we actually have,
So our concern is right now, since we're new, it's very awkward for us since we're new in the business and we were in other businesses before, like we have different jobs. We're selling different things than what we're selling right now, right? So it's a very awkward conversation sometimes to get our existing clients to invest in real estate. So that is where we're at. Although we did have
So when
soft
you say
commits before.
Yeah, when you say existing clients, what kind of client base? Like, what did you sell them before?
Because I do travel, so I have clients who's been regularly traveling with me, and he does power equipment,
yeah. So I do sales and equipment.
robot mowers, and all that,
So
like big equipment.
this is going to be great for pretty much everybody here, and especially for people with previous sales experience. So one of the reasons why I think you might find this a little disorienting is because when we're talking about financial services, it's a different type of sales. So in the whole industry of sales, there's three major types of sales. One type of sales is what we call enterprise sales. So enterprise sales is business to business. So wholesaling, people that are selling to another business. That's one form of sales. It's kind of like a case study, like you would find at a MBA Harvard class. So the person making the decision is not necessarily paying with their own money. And that's typically enterprise sales. So that's one type of social interaction. The next type of sales is the majority of sales that you would come across is what we call transactional based sales. Transactional based sales is where the product is the main focus. And a transaction is typically something that the salesperson will sell the person and never see the person again, or is unlikely to see the person again. So cars, for an example, especially just generic cars or very like a Toyota Corolla, those are sold mostly on transactional based sales. Financial services, especially real estate syndications, because there's a hold for 3 to 5 years or sometimes longer, financial services sales is more relational sales. So once it pivots, and the higher net worth that you get, the more relational it becomes. So I used to be a family office manager, a multifamily family office manager. When you get to family office, 100%, it's all relational based. It's very rarely focused in on transaction at all. So once you understand, or relational starts to pivot away from the product now and starts to focus more on selling yourself. So selling you. And a lot of times what I try to explain for people is like, if you're trying to use one of the other models in this type of interaction, it's going to feel very strange and awkward. It doesn't feel like it's going to work, right? So if you come in, for an example, and one of the things that I explain to people is that if you're under the gun to raise capital and you've got a week to raise capital, and people have said, I've had people tell me this before, where it's like, Ed, we need to raise like 5 million or 1 million in 2 weeks or 1 week. I explain to people, like, first off, there's a lot of pressure there, and it's going to be very difficult, even for seasoned salespeople like myself, to be able to go and hide the fact that I'm under pressure to raise $1 million in 2 weeks, right? Let alone people that have never done it before. It's very similar, like when you're talking about relational based sales, it's very similar to going out and telling me is like, hey, Ed, we're closing in a week, and or somebody saying that I need to go and find a wife or a spouse within a week, and I need to get married and have 3 kids. And it's like, and then you're just going to go to the bar. It's like, hey, I want to get married in 2 weeks. I'm looking for somebody who wants to get married and have 2 kids with me. It's like, are you interested? Right? That's what it's going to sound like when it comes to financial services. That's not going to work. Like, it might work if you talk to 8,000 people. Eventually, you might find one. But when it comes to raising capital from investors, it's very similar, because you're talking about starting a relationship. And I see this so often where people is like, you know what? I'm just going to go on LinkedIn and I'm going to say that we have this deal available. If you're a accredited investor, here's my portal. Please sign up to my portal. That's the equivalent of going up and saying, hey, I'm looking to get married and having 3 kids. I need to get married by next week. If you're interested, please go to my, please go to my Tinder profile and then swipe right, and then we'll start a message, and we'll
Right.
and we'll ask you a couple of questions. It's like, you're probably not going to get anybody.
So the thing is, our type of sales are really relationship based. Like for my travel business, so these people has been traveling with me for years, like maybe 3-4 times a year, and for his, they've been like years.
Yeah.
Yeah, they repeat
So
clients.
like you said, it's my business is more enterprise based because I closed a $1.3 million sales of hard goods, but the people I work with aren't really the ones that cut the check. So you're right. It's
Yes.
more like an enterprise sale, yeah.
Yeah, so you're more enterprise, and you can make a pivot and adjust. And I'll tell you, the biggest pivot that you'll need to make is that from enterprise sales, the focus is more on logic. It's more on the technical details, and you have like a big manual of the pros and cons. When it comes to relational based sales, it's less about that and more about emotion. So Zig Ziglar has a great line: logic will get people to think, emotion will get people to act. And when you're in retail sales and when you're in like relational based sales, it's more based on emotion. So for you, you'll have to go against your 20 years of sales experience and fight the urge to dive down into logic to try to explain your point and try to understand the emotion between you and them. And it's more benefits based. So you're going to present benefits that evoke emotional reaction and uncover and do all your discovery to figure out what are they trying to look for. So, Edna, if you've got a lot of relationships with people already, I think the first thing to do is focus your time. So if you've got a lot of relationships and you know those people well, I would say the first place that you'd, like, if I was your director of sales, I think the first thing to do is be savage about it and cut out all the people that are non-accredited and focus in on just the contacts that you have that are accredited. Once you focus in on just the people that are accredited, look for patterns. And then when you take a look at that pattern, look for where their pain points are. So go back into all the discussions you've had for them. Have they given you any kind of pain points? Have they said that, oh, my daughter isn't really doing well in school? Anything, any kind of stuff that would help you try to understand them a little bit better. And then start there. And then uncover those pain points. Use that as an opportunity to get them to open up. And the more they open up, the more they start talking, the more you can see, is there a way that a real estate syndication could solve some of those problems? Right. So for an example, say somebody says that, I want to leave my husband. It's like, well, why haven't you left your husband? It's because he controls all the finances. I don't know anything about finances. I'm really worried and concerned about that. And I'm worried that I don't have any money. I said, well, what if I could show you a way that you could, it's because, oh, my husband makes all the money and I don't make anything. And he always puts me on an allowance, but I want to leave him. I can't leave him. I said, well, what if I could show you a way where you could generate income just like your husband would send you and you have passive cash flow? Would that interest you? I said, yeah, that would. I said, well, I can show you a way to do that. So a way that, and this is great for everybody. When I present a real estate syndication, don't lead off with logic, all right? Don't lead off with the technical details. Lead off with emotion, which is lead off with the benefits of what a real estate syndication can do. And it's using the sales tactic, or you pivot with a sales strategy, which I call what if. Okay, so you explain, you uncover, you try to understand the person you're talking to, seeing where their pain points are, seeing for some opportunity where real estate syndications can help them, and say that, what if I could show you this? What if I could show you passive cash? Or somebody says that, hey, I'm getting older. I want to spend less time at work. It's becoming more and more demanding. My kids are teenagers now, and I recognize that they don't even know me. I want to spend more time with. Well, why don't you spend more time with them? It's because I got to work so much. Well, why do you got to work so much? It's because we have a high burn rate, and we have expenses. It just keeps piling up. I said, well, what if I could show you a way where you could make a third income? Are you dual income household? Yeah, we're a dual income household. Well, what if I could show you a way where you could be a 3 income household, and somebody could go to work for you and you get passive cash flow? Would that interest you? And then they said, well, yeah, I'd be curious to learn more about it. And then you can start to uncover that. So a lot of times when I'm selling something or presenting a financial product, I talk more about the benefits first. The reason being is a lot of people can have preconceived notions about certain things. Like, I had a life insurance license, for an example. So imagine if you came into this group. It's like, hey, before I get started, is anybody here interested in life insurance? Because I sell life insurance, right? Most people are going to freak out. Most like, you know what, I'm not interested in life insurance, right? Because there's all these connotations that people have about life insurance. So instead, when I present something like life insurance, I explain to people, and this is how I usually lead off, is like, I'm kind of curious, what would you say that if I could show you an investment product that has an incredibly high return, a significant multiple of money that I give back to you that you gave me. So very, very high return, which is guaranteed and pays zero tax. Would you be interested in an investment product like that? And like 99% of the time I had people say, yeah, that sounds fine. I don't think that exists, but if I'd be interested. It's like, well, it does exist. It's been around for hundreds of years and it's a life insurance product. So I sell life insurance as an asset class and it has all those elements, which is, if you can pass the medical, life insurance pays an incredibly high return, pays zero tax, and is guaranteed. And as an investment advisor, I normally can't say the word guaranteed, but when it comes to insurance, I can. Right. So that's an example. But if I said, hey, have you ever thought of life insurance? Then people like freak out. So it's the same thing when you talk to them. Don't start off the conversation by saying like, hey, have you ever considered investing in real estate? Because people is like, oh yeah, my uncle invested in real estate and he lost all this money in 2008. I'd never invested in real estate. Yeah. Now you're in trouble. So talk about the benefits of what it provides first.
Okay. All right.
Thank you.
Yeah, thanks. Great advice.
Very helpful.
All right.
That was really
Any other questions?
good. Yeah. Any other questions or comments?
Okay. So I'll go into some other stuff that I can help some folks with. I get the sense that a lot of folks here are relatively newer for capital raising. So one of the things that I would, if you're looking at you're starting your journey, the way that improve your skills is to start becoming a specialist in millionaire people in America. So start doing your research and start doing Google research, for an example. So I'll give you a couple of this morning, I just Googled millionaires in America and then start learning more and more. So I'll give you some stats to start you off. If you're looking at millionaires across America, you want to target millionaires because you're using a 506c exemption. The highest concentration of millionaires in America is in California. There's over 1 million millionaires in California. That's the highest person. That's the state with the most millionaires. Second highest is Texas. It's about 600,000 millionaires. And then the third and fourth is New York and Florida. New York and Florida are kind of linked because a lot of wealthy people from New York will also head to Florida. So those two are very similar. And once you understand that that's where the spread of wealth is, it starts to give you a better idea. Because what I explain to people is that the biggest thing when it comes to capital raising, if you want to be a very good capital raiser, is the skill of empathy, which is understanding what it's like from your prospect's perspective. And if you're taking a look at wealth in America from just those 4 states, if you want to go and start talking and conversing with those folks, there's 4 different styles of way that I would approach them. Because if you take a look at people or wealthy people in Florida, wealthy people in Texas, and wealthy people in New York, you're talking about 3 different cultures, right? And then you put in Florida, right? So for an example, once you drill down a little bit more, if you're going to target those states, take a look at a millionaire in California, figure out if I became a millionaire in California, what industries would I typically belong to? And a lot of times I would think that a millionaire in California is going to be somewhere in the southern part of California, right? So in Southern California, it's going to be split. I think a lot of the wealth is going to be centralized to the entertainment industry and in Palo Alto. So you're either going to be in tech or you're going to be in entertainment or an industry that supports entertainment, because that's pretty much everything in Southern California. If you're a wealthy person in Texas, there's going to be a lot of industry or a lot of wealth that has been created by energy. New York, there's a lot of wealth that's been created by real estate, and then so on and so forth, right? So it's understanding those industries and understanding those type of people, right? And the great thing, and this is a great place to start, but great thing to look at if you're taking a look at the southern half of California or the entertainment industry, there's tons of books that are out there about the entertainment industry. So if you start reading all the celebrity biographies, you'll start to understand what the culture of Hollywood really is. And then here's one thing that we'll discover when you start to specialize in a specific demographic. A lot of when you get to very high-end capital raising or very high-end sales, it turns into psychology, which is social science. Why do people make the decisions they do, and how to influence those decisions? So when you become a student of social science, you take a look at a social dynamic, and it usually starts in adolescence. So if you go back to high school, and you think in high school, it's very popular, it's very common that you'll come up with the high schools start to form cliques. So you'll start to have like the cheerleaders, the jocks, the theater people, the emo people. Most of you would probably understand that kind of social dynamic. And the reason why that happens is because in adolescence we start to find ourselves. And what happens in the social dynamic is we try to find our tribe, because there's safety in numbers in a social sense. So it's going back all the way to primitive times, but it plays itself out in adolescence and high school. It starts in high school and adolescence, where we want to find safety in numbers, but we find safety in people that are like us. So people that look like me, speak like me, talk like me, have the same interests, have the same values. So all the jocks will hang out together. Because if I'm isolated and I'm ousted, if I'm by myself, that represents social risk, because I'm a loner, right? And that's and in the social dynamic in high school, that's the types of people that people are freaked out with. That guy's a loner, nobody gets along with that person. That's the person that people freak out with. But if you had groups and cliques of people, it's like, oh, those people are cool. They're a little strange. They're not like us, but they're kind of cool. So when you advance further into adulthood, you get into specific industries, and every industry has its own clique, is its own clique itself. And every clique will also have its jargon, right? And then even within those cliques, you'll have even smaller sub cliques. So I'll give you an example. When you go to the corporate world or you go to finance, when you go into finance, I already told you in finance, we'll have the sell side and the buy side people, and you can tell the difference, right? So all the buy side people are all the accountants, the nerds and analysts, and all the sell side people are all the outgoing country club and all the alpha personalities. And when we have our corporate events, you can tell the difference. You can tell the accountants from the salespeople, from the senior management, from the CEOs. Those are all their sub cliques within those groups, and everybody has its own jargon. So here's the thing: when you're raising capital for millionaires, if you're going and you're not a millionaire yourself and you want to go and talk to, like, I've had people like, Ed, I want to go and raise capital from family office, and I don't have any family office contacts. What do I got to do to go get a check from family office? That's like asking, I'm a new person at the school. Can you go and tell me how to go and eat with the cheerleaders? Or can you go and tell me how I can go and hang out with all the jocks? Going from a nobody to going out and hanging with the jocks. I mean, that's a social dynamic. That's a very, very high art, right? If you're trying to do that, whatever industry you're trying to break into, just like in high school, you've got to start dressing like them. You got to start talking like them. You got to pick up their jargon. Because if you don't, what ends up happening is that if you talk to a clique or you talk to a demographic of people and you don't sound like them, then that in the mind will represent risk. Here's an outsider, that he's not one of us. He's not part of our tribe, right? And so when it's not part of your tribe, it's going to be very difficult for you to ask for a check because they don't trust you, because you're not like me. If you're not, the more I feel that you're not like me, the harder it's going to be for you to get that check. The closer you are to me, the more I start to see myself in you, then the more I will trust you. Because what? Because I trust myself. So if I trust, and if you look a lot like me and we share a lot of similarities, then I start to trust you more. And especially if I feel that you're part of my tribe. So I'll give you an example. One of the things I learned in financial services when I was a rookie, when I was an RIA and I went to the rookie program, they said that it's very difficult for you to collect clients that are 10 years more than 10 years either side of you. So 10 years younger or 10 years older. And I disagreed with that because my specialty was baby boomers, and baby boomers are 20, 30 years my senior, right? So how do you go and resonate with a baby boomer when you're not part of that cohort? Well, all I did was I started to talk like their tribe. So I'll give you an example. When I was pitching to I became a specialist in baby boomers and how they think. So it becomes like my study. And one of the things that I started to do is when I give references and I explain certain financial products to them, I pull references from popular culture from when they were young. So I would talk about like Elvis. I would talk about the Beach Boys. I would talk about like all the stuff from the 50s and 60s. right? All like Andy Griffith show, all these types of things. So they would make, so it makes them so I sound like I'm just like them when they were in their 20s. I don't sound like an X-Gen. But if you're talking to a baby boomer and you start talking about Sabrina Carpenter, you start talking about about Ariana Grande, you're distancing yourself. It's like, oh yeah, you sound like my granddaughter. Well, then he just basically said, you don't belong to my tribe, you belong to my granddaughter's tribe, right? And does he trust his granddaughter with his money? Probably not, right? So he wants to trust more people that sound and look like him, right? So I see some moving around. I'll pause if there's any kind of questions that people have based on some of the stuff I just mentioned. No questions?
Thank you. I was trying to type as fast as I can. I like the way you explain things, because a lot of people just talk about building a rapport. They don't really, get into the nitty gritty of like, okay, how do I do this? Right? It's like you go to a biker bar, you see people drinking, you see people smoking. It's like, oh, anybody, I can light up a cigarette, but I still don't talk like them. I can put on a leather jacket, I still don't look like them. Right? And so I really like that, how to, tap into that subliminal mind and say, okay, so you're one of us. And like, I trust myself. I like that.
Yeah. Okay. So Kevin had a question, like, how do you do that with the medical field? So very interesting question. Where I would start, especially if you're not a medical professional, is start reading, like go to the public library and then see if you can find any kind of biography. Because I've already read, because I have some clients that have medical professionals as clients, and I start reading any kind of book that's written by a doctor. All right. So Ben Carson is a good start. Ben Carson is a very famous neurologist, and he had a couple of books, a couple of biographies about neurology, or being a neurologist or a neurosurgeon. So go read those. So go to the library, start reading books written by doctors, and you start to get into their head. And the more you start to read that material, the more you can start to reference certain terms. So if you start using their jargon, because I've done this in psychology, I've done this in accounting, where I've done so much psychology reading that I've had conversations with psychologists, and people ask me, are you a psychologist? And I'm like, no. It's like, this is the most detailed discussion I've had with somebody who isn't a psychologist, right? It's like, you've just done so much research that you sound like them. Or if you come across a doctor, like say you go to a wedding and the person sitting next to you is a doctor, pick their brain, start paying very close attention to how they talk. Pay very close attention to the references that they use. And then the more you start talking to doctors, the more you'll start talking like them and using references. So, and you'll know you've done it right when people's like, Kevin, are you a doctor? Like, are you an MD? Because you sound like an MD. And then you've got it. It might take you a while, but that's the goal to have if it's going to be profitable for you. So start with reading. Okay, so here's another thing to consider. Well, for Jerry, when you're starting out, if you have any kind of particular demographic, like if you're going to any kind of social event, look for the group of people that you think are millionaires. And when you go there, just observe. So observe and see how they talk, how they interact with each other, all these types of things. And then the more you start to do that, the more you'll start to see some patterns. At the same time, I think this is important for everybody, continue your research. So I'll give you a couple of things. When I just Googled millionaires in America, and you just go down this huge rabbit hole, I'll give you some of the stats that I came up with, all right? So millionaire, just for one particular point, millionaire education stats, 88% of millionaires in America graduated from college. 62% of them, of millionaires, graduated from public or state schools. Only 8% attended a prestigious private school. 52% surveyed millionaires earned a master's degree or higher. Okay, so they're educated. So a majority of millionaires in America are educated. So once you understand that, it should adjust the way that you communicate. So 88% of millionaires, chances are most millionaires you're going to come across have a bachelor's degree, right? So start to pay attention to people with bachelor's degree. How do they socially interact with each other? What kind of vocabulary do they use? What kind of language do they use? Doesn't matter if you haven't, you have that or you don't. It's just being able to pay attention to how they talk. A really great thing to do, I think this is a huge action point, is start reading the national newspaper. So it's the Wall Street Journal, financial newspaper, the Wall Street Journal. So I've been reading the national financial newspaper for the last 25 years, every single day. And I had somebody who had an MBA. It's like, holy crap, if you read the Wall Street Journal every day for the last 25 years, that's like 4 back-to-back MBAs, because I can know the curves of what's happened for the last 2.5 decades. I know the history of finance, right? And it's just something that you've got to be consistent with. So the more you start to read that financial newspaper, the more you'll also start to pick up finance jargon. And that's how you get to higher and higher weight classes or higher and higher net worth people, is because the higher the net worth people that that have their money managed by professionals that read that financial news every single day. That is the jargon of the industry. So learn the jargon of the demographic that you want to talk to, but you also, if you want to increase the high net worth people, then you've got to consider the people that you're up against and start learning the jargon of finance. And the best thing to do is start reading the Wall Street Journal on a daily basis. So Rochelle, you had a question? I see your hand raised.
Yes, hi. So I've been going to a lot of in-person events. I'm in Northern California. Most of them been like real estate, investor related type events. I want to try to look for other events. There's a lot of business owners up here in Northern California, a lot of doctors, attorneys, business owners. That's where the money is. So I'm trying to figure out like, what else do I look for that's different outside that without having to go, like my son and I are going to a convention next week in Vegas, WealthCon, but I want to try to find something that's local. So I'm not like always having to travel to big events, but find smaller meetup type things. Do you have ideas for those kinds of things?
Yeah, like I think it's great to go and talk to things that are not real estate based. Like my first avatar was a business owner. So, and it was like business owner manufacturing was one of my biggest here in Toronto. So become a specialist at that. And when you start to talk to them, there's another really great Zig Ziglar line. It's like, this: how do you make first contact and get people's interest? Zig Ziglar has a great line that says, you can have everything you want in life if you help just enough other people get what they want in life. Okay, so I'll say it again. You can have everything you want in life if you help just enough other people get what they want in life. So when I make first contact and I'm going to a conference, one that preferably is not a real estate one, I would go, and you find out the room is all filled with business owners or doctors, whoever. Go and survey them. They're there for a reason. And then just ask them, hey, you're at this conference for a reason. What are you looking for? It's almost like everybody's on the yellow brick road and they're on a journey, and you're Dorothy and just trying to collect similar people that want to go down the same road. And it's like, I just want to help people down the same road. So tell me what journey you're on. What's your quest? What are you looking for? What do you hope to find? And then can I help you find that? And if you start to do that, here's a common thing that you'll come across in society. In any kind of group dynamic, you're going to find the room that there's 4 stages of human interaction in a group dynamic. The biggest stage of most people are self-absorbed. That's not necessarily a negative thing. Most people are there for a reason. They paid a few $1,000s to get there. They're looking for something. So most people especially at a conference, they're self-absorbed because they're looking for something. Then the second is that there's people that go out and tell you, well, everybody's looking for something. So you're aware that now there's a lot of people that, not just me, everybody in the room is trying to sell something or looking for something. And there's very few buyers, right? So that's awareness. Next is you try to go and understand what other people are looking for. So you go and start to survey. And this completely changed how I started to network. Because I went to so many networking events, you'll commonly see this. Everybody's trying to stab each other with business cards and nobody's listening. It's like, it was a waste of time. And when you walk outside, everybody's business cards were littered everywhere. I don't know if people have business cards anymore, but that's kind of what it was at the time. So I said, forget that. I'm not doing that anymore. So what I started to do is I completely changed the polarity of how I started to talk to people. So instead of trying to sell, I started to listen. So when I started to listen, and I took Zig Ziglar at his word and said, you know what, let's just start buying. And start asking people, what are you selling? What are you selling? How can I help you? How can I connect you with people? Right. And then when you do that, then a lineup started in front of me, because it's like, this is the only buyer in the room. And then everybody started to try to talk to me. Right. And then you can start to pick and choose who you want to go and focus in on. So it's like, you know what? Most business owners here are millionaires. So it's like, oh yeah, I only help business owners. So what's your biggest challenge as a business owner? And then start surveying all those things and start making those connections. It completely changes your first contact, because then people are asking you for your business card and following up with you versus the other way around.
Awesome. All right, I think we are done. We have probably like 30 seconds left. So real quick, let's do a screenshot. Okay, 5, 4, 3, 2, 1. Okay, all right. Thank you so much, Edmund. Did you guys learn a lot from him?